Good morning, how do you do, ladies and gentlemen? I'm your host, Seth Julian. Welcome you to today's briefing, where we are now in a solid day 4 of a gold trade. Day 4, I don't know why I'm describing it like I'm some sort of space launch, but this trade that we've been in now for 5 days and 4 hours has gone much faster than we expected, but it's performing along the lines that we outlined, just in more compressed time. Once it broke through that 38%, it broke the 1804 barrier and stayed above it for a while. That's where we noticed it around here. Last Friday. Yeah, that's when it was, last Friday. It's risen a little over 2%, and it's now dancing around the 50% Fibonacci retracement. 1850, let's call it 1859. I would like to see it above 1860, which is right. Oh, I see the problem, right? You have to get rid of that. Right above 1860 there. If it stays above there, it's going to make its way up to the next Fibonacci retracement point, which is the 61% level at 1912. Now, this Fibonacci retracement, just for those of you who are unfamiliar, I'll give you a quick rundown. And now that I've shown you these numbers, so in other words, just before I erase this chart and it becomes it's not visible to scale any longer. This is the level. This is the 50% retracement. I'll show you from what I mean, from whence that retracement is dated and shown. It's when it's gold's high at 2050. I'd like to see it above this line here, the 1860, 1861 level for a couple of days. Then I increase the size of my position and buy in more. Now, just let me show you this chart on a scale that you can see from whence the retracement line is drawn. It's right here at gold's high. Oh, it's moved off this there. It's, you have to maintain these graphs. They get beat up once in a while. Okay, that doesn't change too much. No, it leaves it about the same on the daily scale. We'd like to see it above, so you can see where it traced high, is August of 2020, after once the pandemic recovery seems to get underway. This is the pandemic fear. This low, of course, here, I'll bring it back into perspective so we can get the data at least aligned. This is, like all graphs practically around the world, this is the, where's 2020 fall off? Right in here is where the gold really takes off from 1500 and it's a high of 2050, and then once that recovery starts to kick in and it's clear that the world isn't going to end, gold sells off all the way down to about here, 1630, and it's been fooling around in this area, as you can see from the data set. I'll make the data set longer so to include what we're talking about here. No, sorry. Okay, it's close enough. Most of the price is right around where it is now. So, and this goes back to the end of the beginning of August of 2020. Very shortly after the pandemic kicks in, gold has been in decline. So now that inflation seems to be well entrenched and headed to a double digits around the world, interest rates are rising, and that makes everybody nuts and crazy. The large speculators are increasing their net longs in gold. That's a good sign for this trade. You can see volume is slightly up just at the end. This is the holiday dip, so that doesn't indicate that there's not a lot of sentiment for that. Don't misread that. This is a calendarial effect and not an actual market sentiment effect. Volume always declines, even on a rise like this. If it's the holidays, nobody's at their desk. So that's the gold story. That's the gold trade. It's working out well. Keep your eyes on it. Look for it to stay above 1860 for a bit. Once it's there, we're increasing our position because we think it's going to go to 1906 at the 61% retracement level. That's going to do it for now, ladies and gentlemen. I'm your host, Seth Julian, wishing you all the ability to trade with confidence, ladies and gentlemen. Khalas for now.